winter. But this one's breaking some records. This is the biggest fund yet. Andreessen Horowitz raising $4.5 billion to spend on crypto and blockchain startups and invest through this current downturn. It's the firm's fourth fund in total. They've now raised about $7.6 billion so far to invest in the space. Andreessen's buying both the cryptocurrencies or the tokens associated with companies and then traditional equity as well. And it comes as a lot of those crypto prices are taking a significant haircut along with broader tech. Bitcoin is really the bellwether for this space. It's down more than 50% right now from the high. I talked to partner Ariana Simpson about the timing with this. She says bear markets are often the best opportunities, and when the best opportunities come about, she says people are actually able to focus on building technology rather than prices in the short term. Simpson and another partner at the firm, Chris Dixon, talk about the long-term opportunity here as, quote, the next major computing cycle. They point to PCs in the 80s and the internet and mobile computing. Today, they would call any of these apps built on blockchain technology, Web3, although there are plenty of skeptics around that term, including Jack Dorsey and Elon Musk. The big thing to watch, guys, what effect this flood of VC money is going to have on private valuations as investors all chase the same deals. Those I talked to say for now, crypto valuations are holding up, but they argue NFTs, gaming companies, some of these other crypto names don't really have a good public comparison. Coinbase, the crypto exchange, really is the only publicly traded crypto name out there.
Yeah, and look at that, nearly 75% down year to date. We're going to stay with that company, dig in a little more. MoffettNathanson slicing their expectations for the company, reiterating a buy, but lowering their price target from $600 to $200. Lisa Ellis, the analyst behind that call, joins us now. Lisa, that is quite the cut, $400. I guess what took so long? I mean, sort of the signs have been there, but you think we're maybe at the end of this crypto cycle? What makes you believe that, and what took you so long to make this call?
Yeah, so exactly. So now that we're through a crypto cycle, the peak appeared to have been hit back in December. What we did was take the last crypto cycle and sort of incorporate it into what the outlook for Coinbase going forward, anticipating that no one really knows how this plays out, but historically crypto has gone through these cycles. So trying to incorporate that into our outlook for Coinbase, probably the key and takeaways there is that historically these cycles, while the drop is quick and dramatic, as we've seen in the last few months, once it troughs, it does tend to stay that way for 6, 7, 8 quarters. Last cycle, it took all of 2018 and 2019 before you started to see crypto really start to recover. And so that's sort of the reality check, I guess, with Coinbase. We love the company over the long term, but the reality is that it's likely, from a trading volume perspective, to be pretty, kind of move sideways for the next, 18 months.
Lisa, what makes you think that Coinbase is going to be the winner in this space? I mean, you have others like FTX and Binance. You have Sam Bankman-Fried, the CEO of FTX, saying that their revenue has not declined. They're pushing into new areas. I know we haven't seen the financials, but it does feel like it's in a very different position than Coinbase, which is operating in the public and maybe having a tougher time doing so.
Yeah, well, Coinbase, though, is sitting on a nice pile of cash. That's good. They've got over $6 billion in cash, so they can certainly outlast, this cycle and invest through it as they're doing. But a big distinction, one, Coinbase is very regulatory friendly. So if you believe that as crypto matures, there will be more regulation around it. Coinbase is sort of positioning themselves for the long term to operate in that context in a more regulated environment. So they have participated less kind of on the fringes and derivatives and some of these altcoins, but they are very regulator friendly. That's one big reason. The other reason is because Coinbase is actively diversifying the business into other areas besides simply brokerage and trading. They've got the Coinbase Cloud, which is basically like a Microsoft Azure type of developer platform for crypto. They've got an NFT platform. They're functioning in DeFi and working with wallets. Like they've got about 12, 13% of revenue already, but scaling very rapidly. That is in other areas besides brokerage and trading, which we think is one of the most exciting aspects of Coinbase over the long term.
Hey, Lisa, it was JP Morgan's Investor Day earlier in the week, and one of the things that sort of flew under the radar was their discussion of how they're going to fight against fintech and get into things like buy now, pay later. How do you think about the risk of a legacy financial coming into this market and either taking share or making some kind of bolt-on M&A bid?
Yeah, So absolutely think that we'll see in the crypto space that we'll start to see traditional banks and brokerages starting to offer crypto services to their customers, the way we've seen like with Fidelity, for example, starting to offer Bitcoin and other crypto through their 401ks. But we believe they will do that in partnership with the crypto players, not competitively, because the sophistication you need to run nodes on blockchains and create liquidity in tokens across all these different blockchains, very specialized technical capability that we think that they'll leverage. So whenever we talk to players like Coinbase about it, they see banks, increasingly institutional customers are in a bigger and bigger part of their business because they are partners, not competitors.
Lisa, it's always great to get your insights. Thank you. Lisa Ellis,
Thank you.
MoffettNathanson.